So we're thrilled to have Lou Shipley here, joining Pain Communications.
Nice to see you.
Good to see you too, Lou. Yeah. Really, I appreciate you taking the time out of your busy schedule to join us and talk a little bit about what I consider to be three great themes today. One, getting into a little bit of your background and your experience. Two, the M&A scene and you know the experience you've had with exits and M&As and growing companies. And you know the third area, which I feel is really starting to take off, is the growth marketing side of the industry. So know you've had a long history in the Boston tech scene. Know you've been part of 6 great startups, 2 of them that went IPO, a bunch of them that got bought. Know that you also kind of sculpted your background from sales right to the experienced CEO you are here today. So if you don't mind, I'd love for you to share some of your insights with the group that's going to be looking at the video and kind of getting in a little bit of best practices from Lou Shipley's point of view.
Yeah, so, happy to.
Let's kick off. Let's kick off a little bit on some of the background and the experience.
I ended up going to Harvard Business School, graduated in 1990, and my favorite class there was a class called Entrepreneurial Finance, which is essentially the class that basically went through is what does it take to create something out of nothing? How do you finance an idea and build a company? And I just happened to do my own cold calling and research, and I cold called a guy named Bill Warner, who was the founder of Avid Technology, who responded to me and said, "You are completely unqualified to do anything with tech. You're from Harvard Business School, you went to Trinity College, you just aren't qualified." So I literally said, "What do you need done?" And he goes, "Oh, we need a lot done." I said, "I'll clean the toilets if you need that." Now, he didn't ask me to clean the toilets, but he got me on as a consultant, and then there was the COO at the time who became the CEO, was a guy named Kurt Raleigh, who became a mentor. And I started as a consultant and then eventually took on the Asia Pacific business. And then I moved to Japan and opened Avid Japan KK. And Avid took off and went public, and it was just so much fun that once you get that experience of a really fun, fast growth company, I didn't want to do anything else. I just wanted to find another one.
Right. You mentioned the mentor. I'm always interested to hear early on in your career, kind of who did you really lean on for some of your guidance and your mentorship as you kind of started to build your career out a little bit more?
Yeah, so Kurt was one, Kurt Raleigh, still a very close friend. Another was a guy named Herb Molnar, who happened to be the father of my college roommate and very close friend to this day. Herb had just sort of talked to me about the need to build things and decide when you're early in your career whether you want to be a builder or a runner, and they're very different. And you want to be in a smaller company that's entrepreneurial and sort of create something out of nothing, or fix something that's broken, or do you want to be in a bigger company? And those are really hard jobs too, but they're just different. So he helped me figure out, because my first job was at a big Wall Street firm, that I really didn't want to be in a big company. I wanted to be in a smaller, more agile company.
Right. So safe to say you were a runner.
I was a runner. Still am.
And on the you are. And on the heels of that, you had some really nice kind of exits. Reflectant being the first one, and then Black Duck and their acquisition with Synopsys being the most recent. Can you talk about kind of the experiences you had with both of them? Were there similarities as you were moving and scaling Reflectant to the point of their exit strategy? And then Black Duck, did you take a lot of lessons learned from the CEO role that you had when you were at Reflectant over to Black Duck, or what did you learn that you didn't want to repeat when you were at Black Duck? It could go a bunch of different directions.
And when we talk a little bit about mentoring the next generation, it's sort of saying these are the mistakes. I made them all. Let's not make these ones. You're going to try and solve.
I'm sure they'll get a chuckle out of those as well.
But there was a couple of people at Avid. Dan Keshen became the CEO after Kurt, and then he left and started working with an MIT entrepreneur named Firdaus Bathena, who's a multi-time successful founder, and that was a company called Webline, which we started there, and 3 years later we sold it to Cisco for $325 million. So that was a really good exit. And again, so I worked with some of the same people I had at Avid. Dan subsequently has become a board member and has always been a close friend. But what you do see is a couple of patterns in companies. First, you have to build a great team, and you have to find the right markets. And even a great team in a sort of a lousy market is not going to have a great outcome. So it's being really honest, brutally honest about, is this market growing? Can we really build value here? Because it takes a long time. The average age of a startup now is, it's about 10 years from, if it doesn't get shut down, to either acquisition or IPO. So if they're an average of 10 years, there's, you need to know early on, is this thing going to fly? And
Right.
if it isn't going to be its own, standalone company, you need to be honest about what are our outcomes. And then if we're going to talk about what our outcomes are, who would be a natural strategic partner?
Okay. So on the heels of that, you've had, great experience transforming these brands and looking at areas for growth opportunities. Yep. You did it well with Black Duck, expanding them from open source into the security space. We'll get into a little bit of that later on, but were there any similarities there on the Reflectant side? Did you see when you came into Reflectant that there was opportunities to expand in spaces that the company wasn't really focused in on?
Not really. What I found with Reflectant, the founder there was a really clever guy named Jason Lieblich, was the best startups, and I'm fortunate that the six I've been in have all been this way, solve a real life problem. They're not technology looking for a solution. Mm-hmm. They're not some cool tech that could solve this problem. It's actually a founder that is frustrated with something and goes and works to build a product to solve the problem that he was having pain with. So Bill Warner at Avid, Jason Lieblich at Reflectant, and Doug Levin at Black Duck. He was really prescient to see the growth of open source over time. So the best companies, I think, really do come from a founder that sees this. And I haven't been a founder myself. I've come in to partner with a founder, with a technical founder, to grow the business.
But is that part of your criteria as you go in, like that personal kind of focus that the founder has, that they built something? Because it seems like to be a trend with a lot of
it absolutely is. And I think it dovetails really nicely into growth and sales strategy. Is you need to be able to, when you're selling something, find out what the customer's pain is and sell to the pain. Mm-hmm. In the case of Reflectant, I didn't know if this thing was going to be good or not. I liked Jason. His technology seemed cool. So he made me up a laptop demo, and I drove down to New York and cold called 3 CIOs, and I came back and I said, I think the dogs will eat the dog food. Let's do it. But if I had come back from those 3 meetings and people were saying, this doesn't solve a problem I have, I would have said, I'm going to go do something else.
Yeah.
Because you're going to dedicate, it's a series of serial monogamous relationships, right? And if you're gonna do it, you gotta win in it. So you gotta make sure it's gonna fly. And so you gotta be honest with yourself before you join,
As you look back, Lou, a little bit, like, your last 15 years or so, which have been kind of like at that executive VP sales, then into the CEO role, what would you have done differently? I mean, this is probably going to be a common theme throughout this interview, but what would you have done differently, especially coming out of those 2 successful? It's hard to say what you would have done differently with Black Duck and Reflectant. I mean, those are very successful exit strategies. But did you notice anything that you would have said, I probably could have done maybe that a little bit differently? Or
well, I think there's a couple things. When you're in a small company and you're solving a real problem, the big companies that are in your space start to recognize you, and you start to create pain for them because you start beating them. And then eventually they'll ignore you publicly, and they say, but internally in the product, they're like, these guys are coming right at us. This was so much fun. At Avid, we went after Sony, right? It was fantastic. Sony was just huge, one of the most famous companies in the world at the time. But they were lumbering, they were slow, and they couldn't innovate. They weren't good at digital products. So it was really fun to go poke the bear. I think personally for me, what I've learned and what I might have done differently in the case of Reflectant is I might have hired a banker. We sold it to Citrix, but I think we probably could have got a higher price if we had had a banker and maybe had Microsoft in the bit. Because once you have 2 players, trying to buy you, it becomes easier to sell.
Sure.
And I guess one other thing would be different that I haven't done is I've been in public companies as VP sales or as an early stage employee moving up, but I've never been a public company CEO.
Okay, all right. Let's switch gears a little bit and talk about kind of like the pace of the market today, like your sense of a few different areas that I'd like the viewers to kind of get a better sense from your background. Your thoughts on the VC landscape today from an investment standpoint. I know you sit on several boards as an advisor to either young entrepreneurs or companies that are just starting to build. So how are you preparing them to go and look for any future funding that they may need to scale and grow and become a competitor out there in a market space? And more importantly, just from what you're seeing, you've been a CEO for a while now. You've probably been in front of several VCs. What's changing out there? What should some of the entrepreneurs that are looking at funding be on the lookout for?
Yeah. So I think we're in some ways, when you think about how much technology's changed our lives, we're roughly the same age, right? And how much you didn't have a cell phone.
You're 42?
Yeah.
Damn, you're young.
A little beyond that. But I still think we're in the early innings of some of these, for example, just how a mobile app and the web and connectivity is changing the way everything is done.
Totally.
And so I think first and foremost, being open to new ideas, new ways of doing things is just really paramount. You have to have that. And getting older should not be associated with getting stuck in your own ways, because everything's changing. These younger generations pushing the bounds on everything. And now, not only that, but America's done this so well. Everybody else wants to have a software business. Seoul, Korea is funding their software developers. They want this. They want Boston. They want Silicon Valley. Great jobs. Great wealth created. So, but what I tend to say to the companies that I advise is two things. One is, you better take sales seriously, because most entrepreneurs focus on, if I can build this great product, the product will sell itself. If I can just do what Steve Jobs did with the iPhone, I'm going to be set. And the reality is, you have to do two things really well. You have to build it and you have to sell it. And you have to do both of those really well. And the best companies do both of those things great. And you wouldn't believe this, but so few people really take the time to understand how complex sales is. And they think of it as like, oh, sales is maybe the ShamWow guy, some presenter that's slick and gregarious. Not at all. When you're building a tech software sales business, there's just a lot of detail behind there. So take sales seriously, and then I think the second piece that I tell them is, you're going to make these mistakes. I just wrote an article called "The Top 10 Mistakes First-Time CEOs Make," and I know this because I've made them all, right? So just don't make this mistake. First of all, you got to build a team. You got to make sure when you take investor money, you know who you're working for. It's not your idea anymore. It's not your baby. You're basically co-parenting this organization. You're not in charge, really. And so understanding how things change when you bring on a venture investor is really just some learning there.
I heard you talk a lot about wearing multiple hats.
Yep.
Especially at early stage companies, whether it's being part of R&D on the technology side, building the sales force, understanding how to market and brand, leading the company as the CEO. Do you guide the young entrepreneur today to kind of understand multiple disciplines inside of the company so that they're able to speak knowledgeably about it, but also with some credibility?
Yeah, it's a great question. I think I was really fortunate, because when I sold Reflectant to Citrix basically used Reflectant as its Boston office. We went and made 6 acquisitions as part of that product group, and I became a product group general manager. So I learned a lot about how to get a product out the door. And products that aren't selling, that you got to get rid of them. Like, you got to be really honest about what's selling and not fall in love with some technology that isn't doing well. I think that's a sort of a key thing. That where I found is the best combination of skills for tech CEOs is someone who maybe has an electrical engineering degree and an MBA, right? So you really understand what coding's all about, what does it take to build a product, how hard it is. An MBA understands the business side, what do you have to sell it and market it, and build a business and build a team. So if you have that, there's a number of people from Avid. I think Avid created something like 18 tech CEOs. So one of these great successful companies create these other the people come out and say, well, I've been here and I liked it, I'm going to go do it at another.
It's a great mark of a brand, isn't it? You see some of these companies that just grow in these regions and then they expand, and you see these entrepreneurs come up and start their own businesses from an idea that came probably either from that or just...
Yeah, and I think it's a great point, because I feel like at my stage of my career is what I'd really like to see, especially out of like Black Duck, for example. Black Duck was acquired by Synopsys, great company, great fit. We've fit into their software integrity group. But I wouldn't be surprised if a number of the people that had been at Black Duck become CEOs. And I'm actually really happy to see that, if that's what they want to do. If they want to stay, that's fantastic too. But if they want to go off, and I think the mentors I talked about before felt the same way. Like Herb Molnar or Kurt Raleigh had said, well, you can be a CEO someday.
Yeah, so you almost assume the mentor role for a lot of these younger executives coming through the ranks, kind of part of the legacy that you leave behind a little bit, right? You see these, that's kind of interesting. Let's talk a little bit about the road to Black Duck and Synopsys acquisition. It was a great deal. You did a lot of interesting changes and maneuvers there in the market. What were some of the triggers where you realized you were onto something special with Black Duck? Prior to the acquisition, you came in, and I know you talk a lot about, you saw some areas that they weren't really expanding well into, and you wanted to do the transformation play there, and you noticed specifically security as that hot topic. Why, how, what were some of the other things that you recognized?
Yeah, so I was actually, my story with Black Duck is I was just about to sign as a CEO of another company down in New York when I got a call from the chairman of the board, a guy named Tom Bogan, who had been a very successful CEO. He just sold Adaptive Insights, a company he ran to
the West Coast company,
to Workday for a couple.
Great, great deal.
So Tom was the chair of the board of Citrix, called me and said, there's some opportunity here. You're going to have to work through some problems, but there's some opportunity. What I liked the best was it had a great brand. Everybody knew it, Black Duck. It was used as a verb. You got to Black Duck your code. And what I found when I got in there was that it had gotten, even because it had more than 50% market share and was so well known, there was almost a sense of we've kind of arrived. I kind of looked at it, called it like a lifestyle company. I called it a lifestyle company on a peacetime footing. And it's like, but the problem is when you're venture invested, venture investors expect growth. And we were really only growing when I joined, 10, 15%. We got it up to 80%. Wow. Through three big changes. First was a cultural change. We brought in people that really understood how hard it is to grow at that rate, but you got to say, we're going to do it. The second was we made a product transformation and repositioned the company around open source security. That came clearly out of customer visits. I went and saw JP Morgan. They had some issues with Apache struts, and it was not about open source license compliance, which was the core base of the business. It had grown and was a nice business. But it was about open source security. They didn't care about license compliance at all. So the challenge there was to get people in the company to say, look, this is where the growth is. Let's do this. And some people were like, no, we're good at this. Let's stay and do this. Like, no, you can't grow unless you do this. So that was the second thing, product transformation and repositioning. The third was a sales and marketing integration and combining high velocity inside sales with a digital marketing engine. And that created just a flywheel of growth. And it gave us such confidence that we knew we would make every quarter, which had not been my situation in my previous companies, where you'd maybe make a quarter and miss a quarter. If you're focusing on really big deals like JP Morgan, they might not make it on June 30th. They might, July 1st, and you missed your quarter. So this high velocity sales and marketing engine gave us forecast accuracy and predictability, and that raised the value of the business.
It's interesting you talk about the sales and marketing, and that third discipline. What did you recognize as you were coming in and landing and then expanding, of course, inside of the company that the current skill set had that was either lacking, needed to maybe improve? We talk a lot about pace and the agility of businesses. You hear a lot now about digital transformation. The area that a lot of brands are talking about and enterprises are honing into is there's a skill gap there. As these companies transform from where they were legacy to where they're heading tomorrow with innovation and disruption, there could be a lag period of that skill keeping up with it. Did you experience that at Black Duck?
And it was probably the most poignant, the most noticeable in the sales model, because Black Duck had done a really good job of selling really big deals that took a long time, took a lot of on-site demonstrations and proofs of concept and that sort of thing. And we needed to move it to this high velocity model. We still do the big deals, but you needed to do sort of 10, 20, 30K deals fast and predictable.
Sure.
And what we ended up doing is we recruited a whole new team. We just went to colleges around Boston. We went to UMass, we went to WPI, we went down to Trinity College, we went to all sorts of places, and we now have like 100 people that came in out of college, and we trained them on how to sell our product. And that's been a really successful model. So it went from kind of classic, go hire like the experienced guy with gray hair who's got the Rolodex and he'll sell, versus train people on how to do something in your model. And our VP of sales, Adam Clay, absolutely phenomenal in building this system out.
Do you find that many of them that were coming in at that early stage on the sales side had marketing, like just the understanding on how to like market either themselves or market themselves as a salesperson to a prospect? You know what I mean? It's like we're seeing like the integration of those two functions where sales is marketing, marketing is sales.
That's an interesting point. Well, I would say where we found that, and one of the big changes between what Black Duck had been and what we ended up doing, was there was real distinction between how sales and marketing were run and compensated. Prior to the changes we made, marketing could say, these are our goals, we made them, now pay the bonus. But if you missed the sales number, that's not my fault. Yeah. Well, we changed it to, and our VP of marketing, Bob Canaway, came in and said, look, if we don't make our numbers, we're not paying the bonuses. So sales and marketing were equally comped, and we had marketing would only focus on things that would drive net new sales or sales to existing customers. And that made a huge difference, is that everybody was really on the same team and integrated. Bi-weekly meetings, the best meeting was a bi-weekly meeting where they looked at, we did these leads and they turned into this business, or we did this trade show and it stunk and this wasn't good.
Right.
Let's not do that anymore.
Right.
So we really adopted the fail fast mentality, be brutally honest with yourself. I tell the story about, like, you're a golfer. If someone asks you what your handicap is and you're a 15 and you say you're a 10, you're not, right?
Exactly.
You're not. You're a 15. Yeah. So just say you're a 15. And if you miss a quarter, just say it. And what do we do wrong? Because there is something you can do to get from a 15 to a 10.
Right.
But saying you're a 10 when you're a 15 isn't helping anybody.
Right. Builds a lot of trust, right? I would imagine
those.
I like we talk about those meetings, those bi-weekly meetings, and there's a lot of transparency and knowledge sharing going back and forth, and nobody's really pointing fingers.
And we didn't. That's exactly right. We didn't have the sales guy say we don't have any leads, and the marketing guy say you didn't do anything with our leads we gave. None of that.
Right.
Bob and Adam were just aligned. And it was really, that's the thing about getting a good team.
Yeah.
If you have a great team together and they have the same goals and objectives, it's terrific.
As we get into the next section here, the conclusion of this area is all around, from a guidance standpoint. You look at a lot of these companies, Series A, moving into B, maybe getting into more of the later stage, seeing a lot of PE companies coming into later stage. If you had to narrow it down, the top 3 or 4 kind of points of advice and guidance you would give companies that are at those stages going from A to B, which should they focus in on? Sales and marketing integration probably is going to be one of the top 1 or 1A for you, but what are a couple of the other areas?
Well, it's really interesting you say this, because when I came out and we first started, Avid had an A. Well, that would probably now be called a pre-seed, and then there's a seed, and then there's an A, and then before you know it, you've had like 6 rounds and you're calling it a B.
Yeah.
It used to be A was the first round and B was the second round, and there was some, you only went to a B when you'd proved a lot of this stuff out, and then you needed more money to build maybe predictability, et cetera, but you had done product market fit and you had done some big deals. What I think is the key thing is, back to this handicap analogy, be brutally honest. And that's what investors want to see. The investors want to see that you're learning, that problems are good. What your job is to field the problems, decide which ones you do in which order. It's not to say, hey, isn't this really good, when it really isn't.
Right, right.
So companies that are going from any of these transitions from seed to A to B to C, et cetera. I think when you get to the PE guys, we met at Black Duck because there was a lot of PE interest in Black Duck. There you're looking at very sophisticated analytical numbers-based models, and if you miss a quarter by half a percentage point, it's a really big problem. Whereas in the venture world, like, you might miss and it's a problem, but you're not gonna shut the company down just because of that.
As you think about kind of, you brought it to the point of negotiation.
Yep.
I think there's a lot of executives out there that would want to hear from your point of view, the experience you had negotiating, especially when it got to the Synopsys Black Duck.
Yep.
Much as you can disclose, I understand that it's probably some of it could be a little bit sensitive, but what are some of the must-haves as you're at the negotiation table with some of these larger companies that wield a big wallet but are looking to get a deal on a brand?
So, really interesting question, because I've done it on both sides. When I sold Reflectant to Citrix, I then was the general manager of the group that made 6 acquisitions. And then now we're at Synopsys, and you can see the same thing. The first and foremost, especially if you're going to be in the business for a long time, you don't want to do a deal that might be good for you that isn't good for your employees. So there, the culture fit's the key thing, and you want the employees that are working with you to say, oh, now I get to go to this company, they got better this or that, and more stability, et cetera, more room for career advancement. So the first thing is, I think on both sides, on the buyer side and the seller side, is there a cultural match? Because if there isn't, even if the product's good, the thing's not going to work.
Right.
And the second is, and these are very different between Reflectant and Black Duck. Reflectant, I really needed to sell the company because I had raised 2 rounds and we had done well, but we weren't growing as fast as we needed to. And I loved Citrix and the CEO there, Mark Templeton. We had a great culture fit, and the product market fit was perfect. We went in and I think we did like 6 times sales after the acquisition.
Nice.
So, but then we had to realize we aren't a product, we're now a feature in this bigger company's product line. And some people didn't like that, but that's actually the way business works. In the case of Black Duck, we really didn't need to sell. We were growing nicely, we were profitable, lots of different inbound interest, and I think Synopsys sees what's happened in hardware quality over the years, and hardware security is happening on the software side, that there's going to be more and more demand to have high quality software and software that really works. And so they've assembled a really good portfolio of companies in the software integrity group, and Black Duck is sort of the second biggest product in that group.
Okay. I want to switch gears a little bit and get inside of growth marketing.
Yeah.
Especially on the heels of you having some really successful exit strategies. Two different areas I'd like to get into. One is the whole kind of integrated marketing element here. You wearing multiple hats at Black Duck probably had firsthand knowledge of how PR integrates with social, how social integrates with creative, how creative really takes the guide from content and marketing and what you need to align to the demand gen side of things and show a lot of support to your sales there and really bring great MQLs over to the SQLs, blah, 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 blah.
Yeah.
But you had great firsthand knowledge. So just interested to hear your perspective of how things maybe have changed from, the Reflectant acquisition to Black Duck from the integrated marketing. I think, from a CEO's perspective, the value you put on marketing, I know it's very high. Other areas that you feel should be de-emphasized over being emphasized? I mean, it's all about the customer journey, but...
Yeah, well, it's an interesting question because when we made, at Black Duck, we made the transition to open source security. We didn't abandon compliance. In fact, it's still a big part of our business, but we just emphasized security and built a new product that was... We needed help, and we had Brian Carter, Director of Strategic Communications. We had Pan to help us just beat that drum over and over again and get those stories out there. So you can't just reposition and then say, hey, now we want to be this, so just assume that's what we are. Well, you guys really helped us over and over again over a series of years reposition and get our name indexed properly with Google so that people thought of us as a security company. That's no small feat. That takes time, takes money, it takes expertise like you have. I also found, in between Reflectant and Citrix and Black Duck, I was CEO at Turbonomic, which was called VM Turbo at the time.
Yeah, exactly.
And they had used the high velocity model. So I adopted a lot of, at Black Duck, I sort of changed that model and had much lower turnover, but I used a lot of the same fundamental principles that Bain and Bain Capital use for their companies. And then the marketing piece sort of fed into that.
Okay.
But we also decided, even though when I first joined Black Duck, that we were doing a lot of consulting, having consultants do sort of SEO and search engine work, I said, we got to bring our own people in, so we really know it. So I could ask them every day, where are we on open source security? Are we number 1, 2, or 3 on the search engines? Because once you did that, then we found that the inbound web leads were the ones that closed the fastest, converted at the best rate, they'd done all their homework on us, they were ready to buy.
Right.
And so you didn't have to go out and do a lot of cold calling, they were coming in. So 60% of our business came through that funnel.
Interesting. We're pretty close to ending the conversation. I've really enjoyed it. But there's a couple things that stuck out to me as you kind of evolved in your career. One being the fact that you're closely tied to MIT and Harvard. You're a guest lecturer at Harvard. You're an actual lecturer at MIT. So you've had some really great visibility, both sitting on the boards that you sit on, as well as seeing tomorrow's entrepreneur come through your lectures. Are they ready? Have they changed much from your, like if you looked back 20 years to where you are today, like what's different? And are they prepared?
We're both from Andover.
Correct.
And I was just doing some history on Andover, and there used to be the American Woolen Company, I guess. Yeah. One of the first questions I have for both of my classes at MIT and Harvard is, how many 100-year-old companies are there? And you really can't name many. You just can't name it. Why? Because it's so damn hard. And look at who's the dominant companies in our era: Apple, Facebook, Google. They weren't even around like when we were kids, right? So are the entrepreneurs ready? Yeah, they're ready because the pace of company formation is so great, and we've shown this blueprint for how it can create wealth and create success for so many people. So. The other thing I tend to say is, there's never a better time to take risk than when you're young. I was really lucky. My wife worked when I was able to go to Avid for a third the pay of something else I could have done coming out of business school. My wife had a job and helped me finance it. So I say take the risk and find find a spouse that's going to help you take the risk, because it's better to lose money or fail when you're younger. It's not, it's not bad anytime. You always learn from it, but take the risk. And what I'm seeing in these both these schools is amazing interest in entrepreneurship and building their own companies and doing good.
Yeah, it is true. Are you seeing anything that's kind of rising to the top on the skill set as they come out? I mean, I know that prioritization is key, organization is key, pace is probably really important. Are there specific facets of the entrepreneur's role that you look for and help guide them, or do you look for saying, they've got a shining star sitting in there in sales, or they can market, or they can really run operations and finance well, or they're R&D and technology savvy, so they should really kind of, do you kind of move to an area of their...
Well, I tend to look for this, and I get this great inside view because I have students that take the class, and I have been working with a company called Spoiler Alert. Ricky Ashenfelder and Emily Molina started this really cool company, and they did a great job in my tech sales class, but they have the ability to learn and adjust, and they're not so fixated on what they think is right. They're willing to listen and be coachable. So I think coachability is sort of the first thing, because it's kind of an awkward thing in a sense, because if you think about an entrepreneur who's just so passionate, I'm going to go do this, to think that you'd be coachable, it's a hard set of skills to combine.
Right.
Because oftentimes you see entrepreneurs that saying, I'm going to do this, and I'm going to do this. And it does take some of that force of will to make it successful, but you do need to be reflective and coachable. I knew early in my career, my first founder that I worked with told me, you don't like criticism. When I first heard it, of course I do. I'm like, he's right, I didn't like it. So I think you have to get used to taking the criticism and realizing the best organizations have really smart people all around, and it's not one person's idea that can make the company really different and successful.
Cool. So I just want to kind of conclude with one last question. What are you seeing? What's the next big thing out there? Where are you finding the interest in industries? And it was IoT, now it's AI, and there's just a lot of great technology and disruption taking place both in Boston, Silicon Valley, New York, Austin, Texas, all over the place. What are you thinking?
Well, I think we're still really in the early innings for application security. And if you look at, Synopsys bought us and CA bought Veracode, there's still a lot of growth there, and we're seeing it. We're growing really fast as part of this larger company. I think anything to do with mobile that is disintermediating of sort of a traditional manual process. I've seen lots of really interesting companies there. I guess I'd say, if you look at what this company Spoiler Alert's doing, I mean, they're seeing this problem of food waste, and you don't have to just accept that problem. You can fix it. So I think the other thing that I'm seeing is this younger generation wants to do good in addition to doing well. They really are focused on sort of social impact investing, and which I think is really cool.
Yeah, it almost goes back to your original theme, right? Where you were finding CEOs that built something based on personal experience and interest. Now you're seeing it from their standpoint. They're building, and they're starting to look at businesses to build that they're personally interested in solving and fixing.
Yeah. So then I think the other piece is really working on culture. This is where I think Black Duck did a really good job. We put on a VP of culture, a head of culture. That wasn't the head of HR, it was a head of culture about how do you feel at the office, because it's so hard to get employees, good employees, that they want to come and have fun and do well, but you need to work at that, and you need to think about how you attract people so that they're at their peak performance and peak activity all the time. So I think that's some of the things that companies are starting to recognize, and it makes it harder for really big companies sometimes, not if you're Google, but for other big companies. Because what's interesting is every company is becoming a software company now. They just, General Motors is a big customer of ours. They have 100 million lines of code in each car, right? And so I think the software world is going to continue to grow, and there's going to be lots of interesting opportunities for investing and growing new companies.
Very interesting. If you fast forward 10 years, you've left a mark in the Boston tech scene. What do you want that mark to be?
That's an interesting question. I guess I'd like to see the people that have worked at all the companies I've been in sort of be able to achieve their career aspirations, whether it's staying at a larger company or going and starting another one, and to help as many people achieve what they want to achieve. That would probably be what would make me the happiest.
Good deal. Hey, it was great. I appreciated all the time you spent. It's been a wonderful run with Black Duck leading into Synopsys. I was glad we were able to share some of your insight and expertise.
We'll work together again.
No doubt. Thanks, Lou. Appreciate your time.
All right, Mark, thanks.